I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. Modern Portfolio Theory and Investment Analysis is a comprehensive book by Edwin Elton that provides a thorough introduction to the concepts of portfolio theory and investment analysis. The book is a valuable resource for anyone interested in understanding how to build a diversified portfolio and manage investment risks. The book begins with an overview of the capital markets and the different types of securities available for investment, including stocks, bonds, and mutual funds. Elton then introduces the concept of portfolio theory and explains how investors can use it to construct a portfolio that maximizes returns while minimizing risks. One of the key concepts discussed in the book is the efficient frontier, which represents the set of portfolios that offer the highest return for a given level of risk. Elton explains how investors can use this concept to determine the optimal mix of assets for their portfolio. The book also covers a range of other topics related to investment analysis, including asset pricing models, risk management strategies, and performance evaluation techniques. Elton uses a variety of examples and case studies to illustrate these concepts, making the book both informative and engaging. One of the strengths of the book is its emphasis on practical application. Elton provides readers with step-by-step instructions on how to implement the concepts discussed in the book, including how to calculate portfolio returns and risk measures. Overall, modern portfolio theory and investment analysis is an excellent resource for anyone interested in learning about portfolio theory and investment analysis. The book is well written, comprehensive, and practical, making it a valuable addition to any investor's library. Portfolio theory is a concept that helps investors to construct a diversified portfolio that maximizes returns while minimizing risks. The book explains that investors should not put all their eggs in one basket and should instead diversify their portfolio by investing in different types of assets, such as stocks, bonds, and mutual funds. By diversifying their portfolio, investors can reduce the risk of losing money if one asset performs poorly. The efficient frontier is a crucial concept in portfolio theory, and the book explains it in detail. The efficient frontier is the set of portfolios that offer the highest return for a given level of risk. Elton explains that investors should aim to build a portfolio that lies on the efficient frontier to maximize their returns while minimizing their risks. By doing so, investors can achieve a higher return for the same level of risk, or a lower risk for the same level of return. The book provides practical examples of how to construct a portfolio that lies on the efficient frontier. Elton explains how investors can use asset allocation to achieve their investment goals. Asset allocation involves dividing a portfolio among different asset classes such as stocks, bonds, and cash. The book provides readers with guidance on how to determine the appropriate asset allocation based on their investment objectives and risk tolerance. Overall, portfolio theory is an essential concept for investors to understand, and the book does an excellent job of explaining it in detail. By using portfolio theory, investors can construct a well-diversified portfolio that can help them achieve their investment goals while minimizing their risks. Asset pricing models are another important topic covered in the book. These models help investors to understand how to price securities based on their expected returns and risks. One of the most popular asset pricing models is the Capital Asset Pricing Model, CAPM. The book explains that the CAPM is based on the idea that investors are risk-averse and will only invest in securities that offer a higher expected return to compensate for the risk they are taking. The model assumes that the expected return on a security is equal to the risk-free rate plus a risk premium. The risk premium is calculated based on the security's beta, which measures its sensitivity to market movements. The book also covers other asset pricing models, such as the arbitrage pricing theory, APT, and the Froment-French three-factor model. These models take into account additional factors beyond market risk, such as size and value, to explain asset returns. Understanding asset pricing models is crucial for investors because it helps them to make informed investment decisions. By understanding how to price securities, investors can identify undervalued assets and avoid overvalued ones. The book provides practical examples of how to apply these asset pricing models in the real world, making it easier for investors to put theory into practice. Overall, asset pricing models are an important tool for investors to understand, and the book provides a comprehensive overview of different models and how to use them. By using these models, investors can make better investment decisions and improve their chances of achieving their investment goals. Risk management is an essential aspect of investing, and the book covers different strategies that investors can use to minimize risks. One of the most crucial risk management strategies is diversification, which involves investing in a variety of assets to reduce the risk of loss if one asset performs poorly. Elton explains that investors should not only diversify their portfolio by investing in different asset classes, but also by investing in assets that have low or negative correlations with each other. This way, if one asset's price falls, the other assets in the portfolio can potentially offset those losses. Another risk management strategy discussed in the book is hedging. Hedging involves taking a position in an asset that will offset losses in another asset. For example, an investor might buy put options on a stock to hedge against a potential decline in the stock's price. While hedging can be expensive, it can provide investors with additional protection against downside risks. The book also covers the concept of risk-adjusted returns, which measures the return earned by an investment relative to the risk taken. This approach allows investors to compare the performance of different investments that may have different levels of risk. Elton explains that investors should focus on risk-adjusted returns rather than just the raw returns of their portfolio. Overall, the book provides a comprehensive overview of different risk management strategies and how to implement them. By using these strategies, investors can minimize the risk of loss and improve their chances of achieving their investment goals. Performance evaluation is an essential aspect of investing, and the book covers different techniques that investors can use to assess the performance of their portfolio. One of the most popular measures of portfolio performance is the Sharpe ratio, which measures the excess return earned by a portfolio relative to the risk-free rate, divided by the portfolio's standard deviation. The book explains that the Sharpe ratio is a useful tool for investors to compare the performance of different portfolios. However, the book also cautions that the Sharpe ratio should not be the only measure used to evaluate a portfolio's performance. Other measures such as the Sortino ratio, which measures the excess return earned by a portfolio relative to the downside risk, may be more appropriate depending on an investor's risk tolerance. The book also covers different methods for measuring the risk of a portfolio, including standard deviation and value at risk (VaR). Standard deviation measures the volatility of returns, while VaR measures the maximum loss a portfolio is likely to experience with a given level of confidence. Finally, the book emphasizes the importance of evaluating the performance of a portfolio over the long term. Short-term fluctuations in returns can be misleading, and investors should focus on the long-term performance of their portfolio to evaluate their investment strategy's success. Overall, the book provides a comprehensive overview of different techniques for evaluating the performance of a portfolio. By using these techniques, investors can better understand the strengths and weaknesses of their portfolio and make informed decisions to improve their investment strategy. Practical application is a crucial aspect of investing, and the book provides step-by-step instructions on how to implement the concepts discussed in the book. The book uses examples and case studies to illustrate these concepts, making it easier for readers to understand how to put the theory into practice. The book covers different aspects of practical application, such as how to construct a diversified portfolio using asset allocation, how to measure portfolio risk and return, and how to evaluate portfolio performance using different metrics. One of the strengths of the book is that it provides readers with practical advice on how to implement these concepts in the real world. For example, the book provides readers with instructions on how to calculate portfolio returns and risk measures using Microsoft Excel or other software tools. In addition to providing practical advice, the book also emphasizes the importance of developing an investment strategy that is tailored to an individual's investment objectives and risk tolerance. The book provides readers with guidance on how to develop an investment plan that is appropriate for their unique situation. Overall, the book provides readers with practical guidance on how to implement the concepts of portfolio theory and investment analysis. By using the step-by-step instructions and practical examples provided in the book, investors can develop a better understanding of how to build a well-diversified portfolio that can help them achieve their investment goals while minimizing their risks. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.